11 minutes to the top of the hour. Welcome back to Closing Bell. Technical analysis now. We're joined by Thomas Nagel from Equinet. Good afternoon, Thomas.
Hi, Guy.
Good. Let's talk a little bit about what is happening with the construction story. Clearly, that's going to be the big story for 2008. What are you seeing in the charts?
Yeah, everybody is speaking about the problems in the construction index or in construction sector in America. Here you can see the graph of the home builder index of this sector. You see that we saw a really strong up move within the last years, within the last 20 years. We see that this index formed something like a shoulder-head-shoulder formation within the last 4 years. That means from 2004 to 2007. And 6 months ago, this index broke his neckline around the level of 600 and started a strong sell signal for this index. And what we saw within the last 6 months was strong selling. And so this index came down to the first level of 4775. And within the last weeks and months, the index reached the next main level. It was at 373.50. Same time, this level is a historical retracement level, and in my opinion, that's the base for really a recovery, and that means the underperformance of this index from the last months will be over. So that's a chance now for the next months for 2008.
Thomas, everybody's talking about oil as well today. We've seen the EIA data come through. We've seen events in Pakistan unfolding as well. We were hearing a little bit earlier on that 2008 should see $100 a barrel. What are the charts telling you?
Yeah, crude oil is the next problem of this market. You said that the problems here in Pakistan and so on. I think only these events, these special events, any news and so on, are the base for new pushes on crude oil. Now we are back on the 94.50 level. You know, that's the level I spoke about to you 4 or 6 weeks ago. And now we are in front of an acceleration on the up or downside. If you see an acceleration to the upside, if you see a break of this 94.50 level, in my opinion, the next level will be 104.40. But all of that will only be in something like an overshooting process, because the base for the up move of the last months and weeks and years is only based on speculation on derivative products, in my opinion. And I think that's not the base for a really, really good up move. So let's change to the relative performance. That's the other way for crude oil. Here you can see the relative performance to the S&P 500, and here you see that the last high was not confirmed from these relative index. That means the last high of crude oil was only based on speculation, not on the market wide. And in my opinion, that's a really negative sign. That's a negative divergence. And if we don't get any kind of really bad news from the market side or from the news side, I think we will see a failure on the upside. And so that means a failure on the upside will be the base for a down move.
Thomas, Warren Buffett is not interested in the financials. Are you?
Yeah, the financials are the big negative players of the last weeks and months. You know, we spoke about that too. Here's the Dow Jones Banking Index, the European Banking Index, the SX7P, and you see that this index is inside of a down move within the last months. But I think there are a lot of signs that we could form something like a bottom. We are on a really interesting level of 425. That's an historical retracement. We have formed a second higher low that was, of course, confirmed from the relative performance line, and I think all about that and the negative view from the market for the sector should be the base for a recovery and, of course, perhaps for a further outperformance.
Yeah, interesting to see what the market does and what Mr. Warren Buffett does. Thomas, great to see you. You have a great new year as well.
One more thing.
Yeah?
I have one more thing. Only don't forget it. Stay bullish for European markets.
Now that is quite a hat. I imagine he's going to run around with that on New Year's Eve as well. Stay out of Frankfurt. Anyway, let's move back to the markets. Well, the data today.